today we shall be looking at trend. We shall be looking at support and resistance. Now we shall be considering how supports actually work, what is support, and what are resistance. This is what we are going to be considering in this video or in this presentation. Now, when you are trading, or when you, as a trader, you need to take note of your support and resistance area. Now, if you look at this chart, this is 4 hours chart. Now, if you look down to this place, you will agree with me that this very area, this down here, the down here is a very critical area. Now, there are 3 factors that are laying down at this very particular area. Now we have what you can see as a dotted line, as a blue dotted line. This very line is called support. And again, there's a trend line that is lying across this area. There's a trend line that is forming. This trend line takes a clue from 4-hour support and form into this area. Now, another one is there's a pivot point, which is support 2, that is also lying at this area. Now, this is what I call areas of double. This is what I can define, this is what I can define as areas of double. This area is a very critical area. This area, I repeat again, is a very critical area. This is an area that where the price is coming down, the price the price are bound to respect this area. The price are bound to respect this area. Now, if you look at, there are 3 factors that are lying here. We have the dotted line, which is the support. Then we have the trend line and the pivot point. So when prices are approaching this area is an area that the market will possibly reverse. Now, as a trader, you should be able to understand what resistance and support is. Now, if we look critically to this area, we look very inward, we look very seriously, you will agree with me that at this area we have areas of double. This area will repair the market to the uptrend. Now look at this place. Now, after the price touches this area, what we have now is a bullish candle, that this white candle that formed to an uptrend. Now, this white candle, this area is telling us that when you get here as a trader, you need to exercise some retrain in your trading. That is, you need to wait and see what the prices are doing at that area. This very area is what I refer to as an areas of double, because this area we have a lot of support and resistance. We have support that is coming from daily chart. We have support that is coming, we have a trend line that is coming from 4 hours, and we also have our pivot area. So we have our support 2 at this point. And now look at what the prices are doing. The prices are forming a kind of store at that junction. The prices are forming a kind of retrain at that junction. There's a consolidation of prices at this area. So this very particular area means that you need to exercise retrain. Now let's look at another areas of spotting our support. Now let's go back to daily charts. These are daily charts. Now, if you look at this place, if you look back to your legs, you will realize that at this place we have areas of previous support. Look at this area, areas of previous support. Now, if you look at my pivot point, my pivot point has actually formed at that area. Now, when the pivot point is plotted, it is plotted on the support. Now, look at it from here. You will realize with me that here and here is taking this place is taking a clue from what has happened previously from this place. Now, if you look at it now, when the prices move from here, we have a very bullish candle, which is an engulfing pattern. Look at it from here. This is an engulfing pattern. Look at the move. This is an engulfing pattern. This bullish candle actually engulfed this candle. So this is to tell us that we are going to have an uptrend, that the market, that the prices are going to retrace for some time around this place. Why is it like that? Now, this is what I consider from here to here is what I consider areas of double. I consider this place as an areas of double because, number one, there is a pivot point that formed at this point. Number two, there is my dotted line, which is my support, that formed as support 2. And now, this very particular area is telling us that we should not go down further. We should be looking to go bullish at this junction. Now, this area and this area, there is a corresponding attitude between here and here. So at this point, the bearish move, that is the bearish candle, find it very difficult to move ahead to further their journey. And at that point, they need to retrace. So when you are trading as a trader, you must have in mind to recognize where the prices are going to stop. Number one, the prices stop at support 1, at support 2 at this junction. Look at it from here when they got to this very area. Now, I want you to understand one thing, that support and resistance point is not a point, it's an area, it's not an exact figure, it's an area. Now let's consider this place. You look at it from here, you will realize with me that the market, the prices still have some resistance, some support rather at this point. Look at it from here. Now, from here to here, I call it an area. I define this place as an area because that is an area that we as a trader need to expect possible reversal. I repeat again, this is an area that we as a trader need to expect possible reversal. Now, from here to here is an area. So while we are trading, we must understand that this very area will react to this area. Now, there is every reason for this to move to this place. They are still within the area. Now, if I'm taking a trade now, because I have a clue that this is going to move up, I am going to enter my trade from here. I enter from here and I put my stop loss at this point, and I'm looking to take profit at this very top. Now, let's go back to a shorter time frame and see how we can identify support and resistance. Now, let's see in a shorter time frame. What normally happens in a shorter time frame is a series of consolidations. I repeat again, what normally happens in a shorter time frame is a series of consolidation. What do I mean by consolidation? What I mean by consolidation is where we have two or more bearish candles converging together and finding it very difficult to move up or to move down. Now, if you look at this place now, we have what we call a bullish candle, a bearish candle, a bullish candle, a bearish candle, a bullish candle, a bearish candle, until we have on and on and on, until we have a breakdown to this very moving average, which I refer to 240 moving average. Like I have told you in my previous lesson about 240 moving average that I use for an entry, what I explained to you is that when prices are finding it very difficult to move up or to move up or to move down on 240 moving average, what I'll be looking for is a break of the 240. Now, immediately this breakdown, do you see what happened from here? The prices continue to move down. The prices continue to move down. Look at it from here. When we have a break, then what happened is a series of bearish move. It's a series of bearish move. If I want to calculate how much is the profit I'm going to have from here to here, so I'm having 144 pips. So these are series of, this is how to identify support in a resistance in a bigger time frame. Now let's look at resistance. Let's see how resistance work in this very, let's go back to a long trade. Let's go back to a long trade. Let's see how it works. Now, if you look at this place, the market, the prices rather, form a series of higher high. In other words, the prices form a series of higher high. Look at this place. When the prices touch the pivot from here, what do we have? We have what we call a rebalance. Now, if you look at this pivot line, if you look at the pivot area from here, the prices move down. And once the prices got to this place, what happened? We have a rebalance. Now, let's take a clue. Let's go back here. Let's draw a kind of horizontal line and see where this support is coming from. Let's see where this support is coming from. Now, this is where the support is coming from. If you look at this place, this is an area. This is an area. This place, and if you still look back again, we're still going to find another one. Fine. This place and this place is an area that the prices are respecting. It's an area that the prices is taking its information from. Look at this place now. This very area now actually affects this area. It affects this area. This very place affects this area. It affects this area. Look at it from here. So, to me, I am referring to this place because I'm having my pivot point at this place. I'm referring to this place as what? As an area of double. When you are trading, you must take note the area that you have your support, your resistance, you have your support, your trend line, and also your pivot point. Now, if you have these three combinations, we call this area areas of double. Now, let's go back to, let's look at how we can identify resistance. Now, if you look at this place, when the prices jump up, it form, maybe this happens as a result of news that come out of New York. Now, let's see how this happens. When this jump up, what do we have? We have our 240 moving average. Like I've explained to you, that 240 moving average is a very strong indicator. It's a very strong moving average that is showing a very powerful resistance or support to the price. Now, when the prices approaches this 240 moving average, immediately you go to this area. What do we have? We have a rebalance. Look at it from here. Now, if I should come back now and place another trend line, let me place another horizontal line and see where this is taking its crude. Let's see where it's taking its crude. Look at it from here. Here, look at this place become what we refer to as the double top. Look at it from here. We have a double top from here. Let me draw the line very well so that you can identify areas of double. So we call it double top. So I call it double top. Look at it from here. So, and this area is corresponding, that is reacting to my 240 moving average. This is another point that you must take note of. When you are trading, you need to be very careful to identify those areas of support and resistance in which I refer to as an areas of double. In other words, when you are having supports, you are having your pivot points, and you are having support and resistance at an area, I define this as what? As an areas of double. And this area, prices are bound to respect. Prices are bound to do what? To respect. But sometimes they might break it. That is why, as a trader, you don't need to have a definite. You don't need to be definitive. That is, you don't need to put that, okay, this area definitely this will happen. There is no assurance in that. But we know that once the prices approach that area, there may be a what? There may be a rebalance. There may be a consolidation of prices. Now let's see what happened at this place. If you look at this place now, we have the prices move. This very candle move, it got up. And what do we have? We have what we call a bearish candle, two or more bearish and bullish candle forming. And at the end of the day, we continue to have a move down to the downside. Look at how it moved. It moved from here to the downside. So when the prices also approach this very area, what do we have? We have what we call an areas of double, and we have a rebalance. We have a bullish, we have a bearish engulfing pattern. So after that, what happened? The prices move to an uptrend. So if you can practice this several times, I believe with practice you'll be able to understand how to identify areas of double, how to identify your support and resistance in relation to how you take your trade. So if you want more of this video, I want you to subscribe below and hit the notification button so that when I release more video, you'll be able to have access to them. So thank you.